We are covering these 8 top stocks with big percentage gains today. Our review on STAK. Stak Inc. is a holding company that plays a very hands-on role in the oil field world. They're not in the business of drilling or refining, but rather they build and sell the heavy-duty machinery that keeps those operations running day in and day out. Think oil pumping trucks, fracking units, boiler trucks, wax removal systems, and well repair equipment. Basically, if it's a specialized vehicle or system used to maintain or support an oil well, there's a good chance Stak has a hand in making it. Now, today's market action? Wild. The stock surged a jaw-dropping 94% by the close. And what's even more eye-catching is that more than 50% of that move came early in the day, right near the market open. That kind of breakout is aggressive and typically signals a wave of strong buying pressure, either from speculative retail traders, algo momentum strategies, or possibly folks in a no front running some kind of catalyst. Here's the kicker. There was no official news out during the session. No filings, no press releases. So naturally, that's going to spark a lot of speculation. Could it be tied to whispers of a new contract? Maybe something brewing in the background with oil production ramping up somewhere? Or is it just pure market psychology, low float, high volatility, and traders jumping in on technical strength? Also worth noting, the energy sector has been heating up again, especially with rising geopolitical tensions and fluctuating oil prices. In that kind of environment, companies like Stak, who provide the tools to keep existing wells operating efficiently, can see an uptick in interest. These aren't the flashy EV or clean tech plays, but in a high-demand oil market, this kind of picks and shovels player can become very relevant, very fast. Now the real question for investors is whether this rally has legs or if it's just a short-term pop. Moves like today's can sometimes be the start of something bigger, especially if a contract win or strategic partnership gets announced in the days ahead. But without confirmation, it's also the kind of move where savvy traders take profits quickly, so caution is still warranted. Still, with that kind of volume and price action, Stak Inc just lit up every momentum scanner on the street. And it wouldn't be surprising if we hear more from them very soon. Our review on STSS. Sharps Technology Incorporated is a medical device and pharmaceutical packaging company that's aiming to modernize one of the most overlooked but essential parts of the healthcare system, the syringe. They specialize in smart safety syringes that are designed not just to deliver medicine efficiently, but to also solve some pretty big problems in healthcare delivery, like accidental needle stick injuries, medicine waste, and reuse prevention. Their products, like Securguard and Soliguard, are made with a focus on both patient safety and system efficiency. They even have designs tailored for the growing pre-fillable syringe market, which is big in the pharmaceutical world. Now today, this stock absolutely ripped. Sharps Technology shot up about 70% on the day, and what really got traders' attention was the pre-market move. More than 50% of that gain came before the regular session even opened, with a big breakout right as pre-market got going. That kind of action usually doesn't happen without something lighting a fire, whether it's whispers in the small-cap world, momentum traders jumping on a technical setup, or possibly an under-the-radar development the market's anticipating. Here's the thing, though. There wasn't any formal news out at the time of the move, and that's where things get interesting. A low-float, micro-cap stock like Sharps can explode when demand picks up, especially when it's tied to something investors already see potential in, like safer, smarter drug delivery systems, or U.S.-based manufacturing expansion in a time when Made in America is back in focus. Sharps has also positioned itself at the intersection of two growing trends: smarter healthcare tools and more efficient pharma packaging. So while today's pop may have been largely trader-driven, it also speaks to the fact that this is a name on people's radar. The big question now is whether this was a one-day squeeze or the start of a broader re-rating if bigger players start taking notice. Either way, It's one of those classic low-float runners that can surprise people, especially if real business momentum shows up to match the chart action. Our review on WXM. WF International Ltd is a company that's all about keeping buildings running comfortably and efficiently. They handle supply, installation, and maintenance for HVAC systems, floor heating, and water purification. So think everything from keeping a hotel cool in the summer to making sure clean water is running through a hospital. They've got a pretty broad range of services, covering large-scale commercial projects like offices, airports, and manufacturing facilities. Most of their business is local, and they focus heavily on providing full-service support, from equipment sales to long-term maintenance. Now today, this stock made a bit of noise, up 39% on the day, which definitely isn't something you see every day from a company like this. There wasn't a big headline or earnings report driving it. So this looks more like one of those momentum-fueled moves that can happen when traders start circling around a low-float name that's been flying under the radar. What makes it interesting is the kind of business WF International is in. This is the type of company that can benefit from increased infrastructure, spending, or building modernization trends, especially as governments and private sectors look to upgrade old systems for efficiency and sustainability. There's also always steady demand for HVAC and water purification, especially in commercial and industrial spaces. So while today's move might have been sparked by trader momentum, it could also reflect a growing awareness around the essential, recurring revenue side of their business. These aren't flashy products, but they're crucial, and that kind of steady, under-the-surface value can start getting priced in quickly once it hits the radar. Whether this was a one-off pop or the start of a bigger re-rating is still up in the air, but it's definitely one to watch if that momentum keeps building or if they start landing new projects. Our review on DMN. Damon Incorporated, formerly known as Graffiti Holding Incorporated, is aiming to reinvent what the motorcycle experience looks and feels like in the electric era. They're not just building electric bikes. They're building high-performance, tech-forward machines with some seriously cool innovation baked in. Their flagship tech includes the Hyperdrive powertrain system, which isn't just powerful, but also cleverly doubles as the frame of the bike itself, saving weight and boosting performance. Then you've got the Copilot safety system and Shift Tech, which adapt the bike's ergonomics and give riders an extra layer of awareness and safety. Models like the Hypersport and Hyperfighter are designed to turn heads while quietly packing serious range and torque. Now, today's stock action was pretty eye-catching. Damon popped 38%, and what's especially notable is that most of the breakout happened during the earlier part of regular trading hours, with a sharp 30% jump. This kind of move often signals a mix of retail interest and technical momentum, especially in a name that still feels under the radar for a lot of investors. There wasn't any big news catalyst tied to the spike, but Damon's story lines up with a lot of the themes driving investor excitement right now. EV innovation, sustainable mobility, and disruptive tech in legacy markets. They're also in a niche, electric motorcycles, that's still wide open compared to the four-wheel EV space. So a rally like this might be less about current revenue and more about market potential and the brand's positioning. That said, with moves like today's, it's always good to stay grounded. Momentum can be powerful, but it can also fade just as fast. If Damon can keep executing, build buzz around its bikes, and start getting production numbers up, then this might be more than a short-term spike. But for now, today was a strong signal that more eyes are starting to watch this one. Our review on BW. Babcock Wilcox Enterprises Incorporated is one of those industrial names that's been around for a long time, but is really leaning into the green energy transition in a serious way. They provide a mix of renewable, environmental, and thermal tech for power generation and industrial applications. So think waste-to-energy systems, biomass conversion, emissions control tech, and good old-fashioned steam generation. Their business is split into three segments: renewable, environmental, and thermal, and each one touches different parts of the energy ecosystem, from cleaner industrial heat to emissions reduction. Today's stock action? Definitely not your average day. Shares surged 38%, with a sharp 25% breakout kicking off in the middle of the regular session and running strong in a power hour. That kind of move often signals either a shift in sentiment or a fresh wave of institutional buying, or both. No huge headlines hit the wire during the day, but these kinds of breakouts can happen when a stock's been beaten down or under the radar and suddenly starts flashing some technical strength or renewed attention. Babcock & Wilcox has been in turnaround mode for a while, working to stabilize its balance sheet and lean further into renewables, which has been a slow burn. But days like today hint that investors might finally be seeing some real potential, especially as demand for cleaner energy solutions ramps up globally. The waste-to-energy space, in particular, is gaining traction in Europe and parts of Asia, and with B&W's global footprint, that could be a long-term tailwind. Still, with a run this sharp, it's worth keeping an eye on whether it sticks or retraces in the coming sessions. But for now, it's a sign of life, and maybe the market is starting to wake up to the idea that Babcock & Wilcox isn't just an old name in a legacy industry, but a player quietly positioning itself for the next chapter in energy. Our review on BIYA. Baiya International Group Inc. is a holding company that's playing in a space that's getting more and more attention: flexible employment solutions. Through its subsidiary, it's offering a range of crowdsourced recruitment and SaaS-enabled HR tools across China. We're talking job matching, recruitment outsourcing, project staffing, and labor dispatch services. Basically the full package for companies that need scalable hiring options. And they're laser-focused on some of the country's most critical manufacturing regions like the Pearl River and Yangtze River deltas, which is where a lot of labor demand lies. Now today, the stock popped 38%, which is a pretty big move without any flashy headlines attached. That kind of action often suggests either something brewing under the surface, like early whispers of new contracts, partnerships, or investor buzz, or it's part of a broader theme around rising interest in labor tech and flexible staffing, especially as manufacturing trends shift post-COVID and businesses aim to stay nimble. Baiya is still a relatively under-the-radar name in global markets, but this space, where tech meets hiring, is heating up fast, especially in large, workforce-heavy economies like China. If they can continue to expand within these high-demand regions and keep scaling their SaaS capabilities, there's a decent runway ahead. That said, after a nearly 40% run, we'll have to watch if this was a short squeeze-type move or the start of something more sustained. Either way, today's jump is putting on a few more radar screens. Our review on BIYA. LogicMark Incorporated is one of those companies quietly operating in a really important niche: personal emergency response systems and connected health tech. They're making devices that let people, especially seniors or those with health concerns, live more independently at home while still having a direct line to help when they need it. And unlike a lot of PERS companies out there that lock you into monthly monitoring fees, LogicMark has leaned into a no-subscription model. That's a big draw for folks who just want a one-time purchase with no strings attached, especially when the devices can contact family, friends, or 911 directly. Now today, the stock jumped 32%, which definitely caught some eyes. There wasn't any major headline that drove this, but this kind of move suggests growing interest in the company or perhaps some expectations building behind the scenes, maybe around government contracts, given their ties with the VA, or even some momentum from increased consumer interest in aging at-home tech. With aging populations and rising demand for home-based care options, LogicMark's model fits right into that bigger healthcare shift we're seeing. Their products aren't just gadgets, they're peace of mind, and the company's direct-to-consumer plus government channel approach gives it some interesting flexibility in the market. That said, after a run like this, it's worth keeping an eye out to see if this is the start of a new leg up or just a short-term pop. Either way, it's clear investors are starting to circle back around to this name. Our review on AREC. American Resources Corporation is stepping up its game in a big way, and the market is definitely noticing. The company has been in the business of extracting and processing metallurgical carbon, rare earth minerals, and recycled metals, essential ingredients for the electrification and infrastructure markets. With its operations based in the Central Appalachian Basin, it's been tapping into the growing demand for critical materials needed to support industries like steelmaking and renewable energy. Today, their stock saw a significant jump, up 32%, with a 45% breakout right when regular trading kicked in. A lot of this momentum can be traced back to ReElement Technologies, one of American Resources' subsidiaries. They've been making serious moves to ramp up their operations, with a major fundraising round securing a $150 million pre-money valuation. The funds are going toward commercial-scale equipment, which is key to expanding their production of ultra-pure critical minerals, especially as China continues to impose export restrictions on these vital materials. What makes this even more exciting is the timing. With China limiting access to rare earth elements like samarium, gadolinium, and dysprosium, there's a huge push to find domestic sources to meet growing demand, especially from sectors like defense and electric vehicles. ReElement is positioned to take full advantage of this by ramping up production at its Indiana facilities, which means American Resources is not just riding the wave of high demand, but actively scaling up its capabilities to meet it. With China's actions creating more opportunities for U.S. suppliers, American Resources' diversified approach and their focus on rare earths put them in a prime position to benefit from this shift. And with the market showing strong interest today, it seems like investors are betting on this company's ability to capitalize on both the growing domestic market for critical minerals and the increased urgency around national security and energy independence. Please subscribe. Give the video a like and watch more from our playlist. Thanks.